Thanks everybody for coming on today. As advertised, the mayor's working group here is on tonight, and we're streaming live to have a discussion regarding the proposed conversion for business privilege over mercantile tax over the payroll preparation tax. I've had this is maybe my third go around in terms of having this presentation, so bear with me. I'm also dealing with a little bit of a cold in my head here, so forgive me if I happen to get caught up in a coughing spurt there. But I appreciate everyone on here today. I know we have some guests, and we have some guests that will be helping me along in this process. So let me just talk briefly about some of the facts in and around the about the payroll tax. So first, let me minimize this as well because this is not working. I have you in a spot where it's right my way. Okay, so first, the business privilege and mercantile tax was born out of a Pennsylvania Local Tax Enabling Act of 1965. Some of the act was meant to advance the underlying policy of allowing for taxation as a quid pro quo for businesses taking advantage of local government benefits such as fire, police, and other services. That may sound familiar as we talk about the local services tax. Same definition there, but in 1988, the Pennsylvania Local Tax Reform Commission deemed the business privilege mercantile tax as a nuisance tax because there were some flaws in the drafting and around the scope of the tax base and the services that were providing it. It became almost if there was some inequities in the tax in itself. So it was deemed a nuisance tax back in 1988. As part of that reform, the changes in and around that commission did not allow for any new municipalities to impose this BP tax. So there were some 272 municipalities, taxing jurisdictions that were allowed to be grandfathered, if you will. Of course, the city of Scranton and Scranton School District being two of those 272 that did indeed continue to levy that tax. So the BP taxes are based solely on gross receipts for retailers, wholesalers, and some services. The city of Scranton, we levy it at a fixed rate for all three. The school district levies at three different rates. We'll get into that a little bit later on. So the businesses that fall under the scope of the BP tax include retail businesses, which, as indicated here, were some of the most hard hit by the COVID-19 pandemic. So some additional facts here regarding BP tax. It is often difficult to collect and enforce. Over the decades, particularly in Scranton. The tax evasion piece, I know it's mentioned as tax evasion. It's not necessarily evasion in terms of the criminal piece of it per se, but really it is easy to avoid paying. Tax avoidance is probably a more preferred word to use, where businesses, using the old cash system or other means, maybe not being 100% in terms of their sold assets, that they would not be paying their full.
Just stop at a little restaurant and Jesus.
So we also have some additional things here. The Local Tax Reform Commission declared in 1988 that BP was not an equitable tax system, and it's for some of the reasons that we'll get into here shortly. Efforts in recent years by both city and school district to collect delinquent BPM tax has fallen short of their goals for a number of reasons, nothing specific per se, but there was a lot of reasons why we have not been able to collect on it. Pennsylvania tax laws give local government limited tools to raise new revenue streams, and that is true. Ask any politician what it's like to get tax policy across the finish line in Harrisburg, and they'll give you an arm's length view. It's not a fun process. So it is very difficult for municipalities to be creative with some of these revenue streams. And the opportunity for Scranton to convert on this opportunity is only because we're still currently in Act 47. And I'm fairly certain, and I think I know Jerry Cross is on the line here tonight. I know he could talk a little bit about other cities that may have interest in it, but I can tell you there are other cities that would love to have the opportunity that's here in front of Scranton at this time. So some additional background here. What is the payroll preparation tax? And I know, at least I believe, my good friend Bill Laser is on the line here at somewhere. Bill is a.
Yep.
So, hey Bill, how are you?
I'm good. I got in. I left my phone on my desk in the office. I can't believe it, but I got in with my Apple Watch.
I think we have a bad connection on you there, Bill.
Okay, sorry.
So Bill is a CPA. He's a certified fraud expert. He's also chaired the Lackawanna Tax Collection Committee for Earned Income Tax. I don't know if you're in a better spot, Bill, but we're here talking about the payroll tax. If you could talk a little bit about, the payroll tax is a percentage based on a total payroll. If you could talk a little bit about really what is meant by definition of a payroll.
The payroll, and I'm hoping that you guys can hear me, the payroll includes all compensation paid to employees, whether it's commissions, overtime, salary, bonus, any sort of compensation paid to employees, and equated to similar to the payroll that you would be reporting for withholding your earned income tax for either your host municipality or your non-resident municipality. The payroll tax would be, payroll preparation tax would be driven from almost exactly the same database as would be the base for your withholding for your earned income tax. Because of this, the administration of it, the collection of it, would wind up being much easier than the administration and collection of the business privilege tax. The tax collector can use the same database if it's the same tax collector that can use the same basis for the earned income tax collections. In addition, the payroll tax follows some of the good guiding principles of good tax policy that have been set forth not only by the American Institute of CPAs, but by the Municipal Finance Government Officers Association. The tax should be broadly based. There's a certainty to the tax. You can predict what it's going to be. As far as convenience of payment, we anticipate that the legislation that's passed will wind up being with quarterly payments. The administration of the tax will be much more efficient than the administration of DPT. It'll be very simple. It'll be transparent. The taxpayers will know what their tax obligation is going to be, and it's going to create exactly the same amount of revenues that the BPT creates now, no more and no less. And if the rate that we have calculated turns out to be needing adjustment, then it can be adjusted in year 2. So for those reasons and the fact that we're in Act 47 and able to do this, I believe that the preparation tax is a much needed improvement over the business privilege tax.
Well, thank you for that. I appreciate that background. And we'll dip in a little more about the enabling legislation and how we came here. But I appreciate the explanation on the tax piece. So some more additional information. I know Bill's in his vehicle, so I appreciate him hopping on here, but he doesn't have the privilege of having this live. I don't think he does anyway, in terms of seeing what we're looking at. So an employer conducting business within the city which employs one or more individuals, owns or leases property for business, maintains a stock or tangible personal property in the city. Basically, some of the things that describe business owners or some business that are actually being conducted in the city is really what falls under the businesses that would be susceptible under the scope of payroll prep tax. So that's just some more additional information. And we're glad to provide this PowerPoint to those. If you want to get it, just contact Morgan and we'll get this out to you. So some additional background here. Why should we consider the payroll prep tax? Well, one, it represents a more equitable tax, and Bill just kind of alluded to it. I've been talking now a couple of times regarding the ABLES, if you will. So it's equitable, collectible, and predictable. But here we're talking about an equitable tax. It's more equitable than business privilege by allowing and sharing the burden between all the businesses and all business sectors. As again, we indicated earlier that currently under the business privilege tax, financial institutions or financial businesses and manufacturers do not pay the business privilege tax. The other thing is it provides a link with non-resident salaries, employers, and employees who benefit from the very services that are provided here in the city. And then this goes to the part about being collectible. Collections are far more efficient as rates are based on payroll data, which is already collected in the form of local wage tax. So again, it's tough to make any change, but I think those couple of points I made regarding the equitability, the collectability, and then the predictability, and I'll get to the predictability in a second, but that collectability is an important piece because one, I think, and this, I was talking to Bill Urbanek from Pittsburgh earlier about their experience, and we'll get to Pittsburgh later on too, but just so you know, Pittsburgh had some early discussions on it as well. And that collectability piece really is at the base of it. So there's so many changes and loopholes in tax law, and over the years, the business privilege tax had been given so many passes on different points for businesses that allow them to circumvent paying that BP tax. It gets to the point where it becomes onerous on those who are paying it, and those who don't pay it, again, it identifies a nuisance tax. It just goes off, and there's no equitability there. So there's a two, collectible and equitable. And again, we'll get to the predictable in a moment here. So moving
Larry,
down. So
Larry,
yes.
Bill Laser here again. Just to expand on your point, most of the taxability for business privilege tax has been determined by court cases, defining what manufacturing and non-manufacturing activities are. Manufacturers are not subject to the business privilege tax, and non-manufacturers are. And again, with
I think Bill, I think we're losing you again.
The payroll prep tax.
So we lost you there for about 30 seconds. If you remember what you said there directly, we lost you again.
I'm sorry, I apologize. The business privilege tax is not assessed on manufacturers, but manufacturing has only been defined in court cases. There's different items that you would think would be manufactured, such as the canning of vegetables is not manufacturing. The making of egg beaters is not manufacturing. The reason it's not manufacturing is because the chicken makes the egg. But the making of barrels and the baking of bread and donuts, those are all manufacturing activities. In addition, the exempt receipts for business privilege tax include the sale of alcoholic beverages. The sale of alcoholic beverages is not subject to the business privilege tax. Banks and financial institutions are not subject to the business privilege tax because their activities are preempted by the state. So this gives us a more well-defined tax base upon which to assess and collect the payroll preparation tax.
Larry, Maria Costanzo from the tax office.
Hi, Maria.
Don't you think you're going to lose a lot more businesses than you're going to pick up?
Well, listen, I think there's no, let me just say, I did speak to Bill Urbanek today again about Pittsburgh and their experience with it. That is something that, of course, you're always concerned about. We're not interested in losing any businesses here. But for the amount, right now, the tax policy we currently have on the books, it's archaic, it's old. It's inequitable. So in order for us to be progressive, Maria, and I understand your position on this, we need to find more progressive tax policy. There's an opportunity.
Don't you think we're giving away an awful lot? Like, you're gonna pick up manufacturing and banks, I get it. But you're gonna lose all outside contractors. You're gonna lose all rental income. You're gonna lose all businesses without employees, so sole proprietors. That's a lot to give up to gain what, 50, 60 banks and manufacturing places?
Well, they're first of all, sole proprietors. I mean, if you're paying payroll on it, they're not all exempt. If you have one employee in the business, you're still susceptible to the business tax or to the payroll
So
tax.
on themselves.
Right.
Right?
Oop, I'm sorry, what was that?
A sole proprietor would pay for their own income?
Well,
that
if
what you're
they're paying earned income tax on it. That's correct.
But are they paying payroll tax on
They would be paying-
themselves? On
They'd
their
be
own
paying
earnings?
payroll tax because it's a payroll.
And who's gonna audit that? Because
In
that would be an
terms of-
audit.
I'm sorry.
So they don't pay on a payroll for earned income tax. They would pay on themselves personally. So that would include, there would have to be an audit
Well,
for that.
There's no doubt we still have some questions, Maria, about some of the technicalities, and we put an RFP out to hire some legal services that could walk us through some of these things. So there are some questions, no doubt. So I can't answer everything with it. But we're trying to get the answers. I met with some of the folks from the business community. They too had some questions that I still have out there and I'm trying to get answered. So I hear concerns, and I'm glad to, whatever you may have on aside from what we're going through tonight, I'm glad to walk through and take your questions and see if I can get them answered for you.
Okay.
Okay.
Yeah, I just kind of, it's November 3rd already, and
Oh.
it just seems a little out of whack to me, but sorry.
I don't
to interrupt.
listen. I don't dispute that, but I've been in this role for 5 months, and it's been around now for a number of years. And this is one of the things I mentioned was when I worked for the senator's office. This was on a track to move along. COVID hit. We did get an extension under Act 47. We can talk about that in a minute as enabling legislation. But here we are at the 11th and a half hour, and this has gone through. There's been some questions. It's like everything else. When we get close to the finish line, everyone comes out with the questions at the end of it, and for one reason or another, to try to derail it or try to slow things down. And in this case, we only have as long as we're in Act 47 to enable these things. It was my interpretation prior to even coming here that this had been vetted several times. I know there are still a lot of outlying questions, and hopefully we could get some of the answers as we walk through this tonight. And if there's still questions, please feel free to reach out to me, and whatever answers are out there, I'll try to get them answered for you.
Publicly?
I'm sorry?
Publicly?
Publicly or privately? This is my third or fourth time doing it, Marie. I'm not afraid to talk about it publicly. I'm okay to talk about it publicly.
Okay, because we've brought stuff up before and gotten no response. We got no response from the school district. We got no response from the city. I did talk to Carl about it back in the day, but.
Well, listen, I can't speak for what was in the past. I'm here, and if we need to do this again, I'm glad to do it again. I'll do it publicly. We meet this task force. This task force has been meeting monthly now for a couple of years, 2 years or so. So I'm glad to revisit this. I'm glad to answer whatever questions you might have. Get them to me, and we'll answer them publicly. And I'll do as much as we have to do it to get it across the finish line.
And
Okay.
I'd be lying if I said I could keep track of every email I've sent, but I can assure you, Maria, that anything that came to the district has been forwarded to this committee and is part of the file and the list of questions that are being addressed. So I'm sure if anything new is coming up now, we can do the same thing.
Thanks,
Okay.
Katie.
Thanks.
So move on to the next slide here. Some of the background on it. So here's some requirements that are specific to the city of Scranton. So right now, the BP accounts for roughly $2.5 million of the city's annual revenue, and it's about 8.5 of the school district's revenue. Again, we're talking, $11 million total in tax revenue between two tax entities that have a combined budget of about $250+ million a year. So it's a really, in terms of percentages, and I know it's every dollar counts. I don't mean to minimize it, but there's a very small percentage of what the overall budget. The other thing that's important to note here is that it must be revenue neutral, meaning that the dollars that we were taking and projected to take in from last year to last audit year is what we have to determine in the revenue neutrality for the first year of the payroll prep tax. And something that's different between Scranton's opportunity and what Pittsburgh had done over a decade ago is that the BP cannot be enacted concurrently, meaning we have to shift directly from the BP tax over to payroll prep tax. Pittsburgh's experience, and we'll talk about that later. My friend Fred Reddick is online here, but we'll talk about Pittsburgh's experience where they had a 5-year conversion. We do not have that opportunity. But the reason why we do have this opportunity is because the city of Scranton was under Act 47 distress status for nearly 30 years. And I'm happy to say that we will be exiting this coming January. Basically, we're losing our training wheels, if you will. We'll be on our own as of January. But Jerry Cross, who is the coordinator for Scranton's Act 47 for the Pennsylvania Economy League, I know Jerry is on the line here as well. And Jerry, if you could talk a little bit about this enabling legislation and what it means and the process that we went through, basically to get us to this point, maybe give some clarity on that.
Sure, Larry, thanks a lot. The recovery plan from 2015 and the exit plan in 2017 both took advantage of the opportunity of a new authorization. The legislature amended Act 47 in 2014, which in addition to putting in a deadline for the length of time in Act 47, it also gave some revenue options along with those deadlines, because it was recognized that the antiquated tax system that many municipalities are operating under would continue to be a burden once you left Act 47. So the legislature recognized that there was some good ideas out there, and let's adopt them for Act 47 municipalities, and let's keep them in place following their termination of distress status. The local services tax, which was tripled in Pittsburgh and was offered across the state at a $52 rate, Act 47 people can get it for $156, and that's available in the city of Scranton. It was in the recovery plan and the exit plan. The subject today, the payroll prep tax, was also an initiative of the exit plan and the recovery plan. The city voted to accept the recovery plan and the exit plan as ordinances of the city. So we're following a long process of just filling out the initiatives and doing the investigation of those initiatives under Act 47. When we did the exit plan, the city considered several things along with the coordinator regarding a modernization of the tax structure. I think Larry's covered a lot of these points, but it doesn't hurt to explain again that these were built into the recovery and exit plans because the tax structure in many of our municipalities is an older tax structure based on a Pennsylvania that existed 70 years ago and doesn't really exist today as far as business environment and demographics. The whole business privilege tax is based on an outmoded business model, which assumes at its base that the more you sell and the higher your gross, the more profit you make. Consequently, the more tax you could afford to be charged with. It also assumes that there is separate and distinct areas within a municipality dedicated to either wholesale or retail. If you were able to go back to Scranton of 1960, you'd see that very clearly, that the separate wholesale districts would dispatch trucks and people would leave their businesses on the corner grocery stores and such. And it was really a self-contained business model which had separate and distinct areas. That no longer applies. The payroll prep tax and business privilege tax difference is payroll prep would obviously have a more efficient and fair collection and enforcement mechanism. It's been widely acknowledged that the business tax collection for BP and mercantile allows for some level of avoidance of the tax. Regardless of what city you're in, one of the biggest banes is the avoidance of tax, or at least maintaining a current database of businesses that open and close and who's subject to the taxes. The business privilege tax relies on your sales of last year, the prior fiscal year. Those taxes are paid in April on the prior years. Any small business will tell you that it lives on a cash flow basis. And unless they're accruing those taxes during the sale period, That's a heavy hit sometimes in April and early part of the year for businesses to come up with the money out of their existing cash flow. Payroll prep tax is based on a current levy on payroll. So in a sense, it's more elastic. It's more timely in the impact on businesses. It reflects much more timely the business activity. Payrolls rise and fall with level of business activity, and it's current. It's not accrued for the prior year, and you have a bill due on money you've already spent to maintain your business. And PPT comes with a built-in monitoring system through the wage tax collection system. Act 32, almost 10 years ago, consolidated the earned income tax collection in Pennsylvania, which was fraught with many of the same things and problems that you see in business privilege. That was modernized in the early part of, well, it's about 2012 or 2013 to great effect. And now it's a countywide system with uniform enforcement and uniform collection. It's enhanced the EIT collection across the counties. And PPT would be a subset of that because it would be the same base of revenue. So you have a built-in monitoring system. PPT has a uniformity of rates. Now, Scranton has a single rate for all levels of business activity, but the school district doesn't. In fact, the school district's highest rate is the service provider rate, which is the type of business that has been gravitating towards cities and such over the last 20 or 30 years. Service providers provide an awful lot of business, and school district taxes them at the highest rate. But the PPT is a uniform rate, and the Act 47 plan consider that any type of modernization and uniformity would give the city some certainty and sustainability to their revenue base, post Act 47. And PPT, it relies on a subset of your overhead, not the actual gross revenue, but a subset of your business overhead instead of the entire gross receipts. So the Act 47 plan and the coordinator, along with the city council and the mayor at the time, realized that the PPT initiative would represent a city evolution from a wide-ranging mercantile and wholesale hub of the 20th century, which Scranton was, into what it is now, which is a location for employment of a wide variety of people, positions, and payrolls. So that was the thinking behind the Act 47 initiative, to take advantage of those authorizations allowed under the modifications to the Act.
Thanks, Jerry. I appreciate that. And to expand on that, and Jerry, I really appreciate the support you've given here over the years. I know that we're close to I know we have a couple of more events that we got to do as we get close to this January date, but I really want to express my gratitude to you and all you've done supporting the city and all the initiatives that we've had undertake over the last, I know you weren't here the full 30 years, but Pell has been here. So I really appreciate that. Even during this process, you've been a good friend, and we appreciate that.
Thank you, Larry. The coordinator goes right back at the city. It's been a partnership.
Yeah. So thank you. To expand on that a little bit about Act 47 and the opportunity for Scranton, that enabling legislation, just so you know, when I worked for Senator Blake, that was not just a singular siloed process. It was the original legislation that was put through needed to be refined 2 or 3 times for different reasons. One of them being the school district, unbeknownst at the time legislation was written, had also been levying the BP tax, and they would not have been able under that legislation to be allowed to convert. So in the following year, the senator worked to get some enabling legislation that allowed for the school district to go ahead and convert to the payroll prep tax, which again, as I mentioned in my opening slide deck or two, to get taxing legislation across the finish line in Harrisburg is no easy feat, but we were able to navigate both of these pieces over the course of a couple of years. But a key piece is that the school district does indeed have the ability to enact this payroll prep tax even after the city has left Act 47. So that was a discussion that had gone back and forth between the school district and the city. And in a moment, I'm going to introduce Pat Laffey, the business manager for the school district. But suffice it to say, our relationship with the district has been really good. We've been working on communicating and trying to find a collaboration here on this tax change. One of the things that picks up for the school district that comes out pretty clear is that there's a lag in revenues, which was part of the school board's concern, and rightfully so. The $1.8 million that lag in revenue. I notice we're saying lag. It's not lost revenue, but just so you know that lag in revenue is from that first quarter. Jerry indicated that it is paid with the earned income tax. So there would be that lag in that first quarter. And for the district, it equates to about $1.8 million. But that's something I think we're working through with the district. The city and the district have been talking back and forth about ways that we could help maybe offset some of those things. And there are ongoing efforts with the city and our state legislators to maybe ask the Commonwealth to come back to the table for some additional support here.
Sorry, that's
So-
not really a lag.
Sorry?
The fourth quarter that is paid in January would make up the tax in the next year. So that first year, you're losing a quarter.
Yeah, it's when you say losing the quarter, there is just a lag in the revenue. Someone picking up there?
That's not me. I don't know where that's coming from.
Okay, that's all right. No worries.
You're only getting 3/4 of revenue in the first year. I know, I
Yes.
understand that the fourth quarter is for the previous year, but it counts towards the budgeted amount in the second year. So you're basically losing 25% the first year.
So, but to be careful. with
Larry,
that
Larry, I can speak to this.
Go ahead, Pat. Yep.
Yeah, Maria, you're not wrong. I mean, the way that we handle and I've spoken to our auditors, and the way that we handle our earned income tax collection, which I believe this is proposed to be on a similar cycle. That is correct. That fourth quarter payment that's due by the employer by January 31st remains as revenue in that current period. It doesn't get booked back as a receivable for that year. However, we budgeted for that 1 quarter loss in 2022, and we anticipate that returning to a full four quarter cycle in the next full year.
Right.
And
But
those wages
and I
would
get it,
come
Pat.
due at the
But
end.
the first year, it will be
Yes, and we're-
25% less.
Yes, and we're budgeting accordingly for that.
Thank you.
I appreciate that. By the way, that was Pat Laffey, the business administrator at the school district. Kind of got in a little ahead of the curve there, but Pat, I appreciate the explanation there. And I'm gonna call on you again here in a moment. But Maria,
Certainly.
you got that? We're clear?
Yes.
Okay,
Yep,
good.
I'm good.
Thanks. So I'll move on to the next slide here. So some of the work that we've completed in assessing the payroll prep tax, and there were some things that the administration and the school district did have to do prior to enabling, even considering the enabling of this tax. And one of them is that the city of Scranton had to go to the Court of Common Pleas and identify and have them approve the rate, which we did do. And the rate was set on the 2019 earnings. So what you're looking at on there, that 1.085 is the combined taxable rate for both the district and the city itself. So the city went ahead and did that in 2019, and for the school district's part, they were required to put this question on a referendum, which they had done in 2019 in the November municipal general election. And the voters overwhelmingly supported it by a 72% margin to again support that enable the district to convert. This was at this point where I was going to ask Pat to step in. Pat, I don't know if you had anything else you wanted to add there, but Pat's the business manager at the school district, my counterpart over there, the other taxing entity in the city. Been a great partner, and I appreciate all the work you have done, at least getting me up to speed to where our two organizations work together where we could collaborate. So Pat, if you want to say something else on that space.
Yeah, certainly. Thanks, Larry. And just a quick background on the school district side. The authority to convert for the school district, the city had mentioned Act 47. Ours, I believe, is Act 30. At the time when Act 30 was adopted, it did state that a school district could make the conversion if it was located in a municipally distressed city. At that time is when we did do the referendum in 2019 for the conversion in 2020. At that time, I don't think we had all of our ducks in a row getting ready to make the conversion, and the city at that time I don't think had asked for their approval also. Our recovery plan does call for us to explore this conversion, similar to the city's recovery plan. And we've been doing that, I think, in good partnership with the city for a couple of years now. Subsequent to that, the House Bill 1210 removed the requirement that a referendum is necessary for the school district to make the conversion, and also removed the requirement that they must be located in a Act 47 distressed municipality. So we have the ability to make that conversion at any time. Recently, my board, instructed or asked me to include this conversion in our 2022 proposed final budget. We have done. It's been adopted was adopted on November 1st. It is up on our website for public display, as well as at the Memorial Library. I have been tasked with, as Maria noted, trying to work to offset some of those lag in collections or lost revenues in that first year. So that's something that we are working on with the city of Scranton, hopefully prior to our final adoption on November 30th. Thank you.
Thanks, Pat. Again, I appreciate the school districts collaborating here. These tax policy, Maria Schumacher, did you want to say something?
Yeah. Oh, no, not right now.
Okay, sure. None of these tax policy discussions are easy, and there's a lot to review. There's history here. I don't think it's any secret that the city and the school district have been having financial issues for a long time. We're hopeful that some collaborating pieces will find our way through this, and we will come out on the other side of these things in a better space financially. One other note that I want to make here, and I may have skipped over to bullet point because I should have covered it over by now. Part of the enabling legislation, another benefit that we have here in Scranton that Pittsburgh did not benefit from is that we have the ability to recalculate our rate. So this year we go through the first year, again, revenue neutral, based on the rate that's been approved by the Court of Common Pleas. If after 1 year, if our calculation needs to be adjusted, both the district and the city have the ability to do a one-time adjustment to make sure that we gain revenue neutrality. So again, in Pittsburgh's case, and we can talk about a little bit later on, Pittsburgh did not have the ability to recalculate that rate. They set their rate at 0.005, which was woefully, I won't say woefully, it suffice to say, they were not revenue neutral. They actually lost money their first year. But again, I'll go back and we'll talk about, and I have the latest updated numbers from Pittsburgh today regarding their collection of the tax. So, but I appreciate the input there, Pat. So moving on to the next slide, here are some examples of the payroll tax for Scranton businesses. Again, these are rounded numbers, they're general numbers, but that's basically what the calculation comes out to based on the size of the payroll. Again, a dentist with a $134,000 payroll would pay about $1,400 in payroll tax. So there's again some explanations, some numbers just to put them into perspective for you, and that's at the 1.085%. At the 1.085% rate. So some of the next steps, and some of these things, as you can see, they are outdated, and we've done a number of them, but we just want to kind of keep the timeline there so that everyone can see really what we've been working on and what we've accomplished. So again, we've already talked about the referendum. We talked about the Court of Common Pleas. We talked about the tax policy working group, which is what this forum is here. We've been talking about other tax issues, but this is obviously payroll tax has been one that's been bantied for some time. We've been doing some data preparation and collecting that data, working with a couple of the data collectors that both the school district and the city had hired a couple of years ago. Turnkey and eCollect both had provided some information to both of our tax bodies. One of the things here, like number 5, the appeals process and adoption. These are things that we really need some support, looking for some legal support between the district and the city. Pat and I can report out that I believe that should be in the paper tomorrow in the coming days, the RFP that we have been working on collectively, make sure our language is correct. We had to get some final steps in that, but that should be out within the next day or two. get that in the paper and published. But the city and the school district have been working collaboratively on a process to put an RFP out so that we could bring in some of these professionals to help us walk through this conversion. We talked about the Scranton School Board has up for some consideration adoption. Scranton City Council, and I know there were some councilmen on here, and I don't want to speak for them. They could certainly opine for themselves about their thoughts on the consideration and where that's at. But suffice to say that we are too on a timeline as it relates to putting out to the public, holding the public hearings and whatnot, and getting it through the council's process for adopting legislation. And then, of course, the city of Scranton, we'd have to adopt our budget by the middle of December. So soliciting the RFP for collection services, that too is a second RFP that we were working on collectively and jointly with the school district. That too, they're going out together. And then some of the other things that are still left hanging out there is, the education piece and the marketing piece to really educate the business community as a whole and at large about the process and what's next steps for them and really how this will work for them. So this is one piece that, we talked about it numerous times about really how do we get there in terms of that education piece and really getting to the businesses other than these public forums and really trying our best to answer questions. But really social media posts, press releases, we've done some advertising. We did do some outreach with the Chamber of Commerce. We've talked to Scranton Tomorrow, some other social clubs and business organizations throughout the city. And I think webinars, having accessibility to some webinars, and I'm not sure how we get to that piece of it, but so that business can learn the process and really what's involved for them. And that's all part of the education and the marketing piece. And then for the businesses, the technical assistance. There are some other examples that with some. So we have the only example we have outside of what we've learned is Pittsburgh. I do know, and Jerry, I don't think you touched on it, but there are other municipalities that may have some interest in also converting that are in this same Act 47 space that we are.
Well, I was in court this morning, and the Judge Pirantoni in Luzerne County Court granted the petition of Hazelton City to levy a payroll preparation tax in 2022. Hazelton is also getting rid of their business privilege and mercantile and going towards payroll preparation tax. So that's slated for Hazelton.
Okay. So there are other municipalities that are in similar space to Scranton, and I do think that again, there's always that fear of the unknown, but I think there's enough out there that gives us enough to push this rock. So some other considerations. The city and the district should be prepared for changes in revenue the first year. We've talked about that already. There is that 25%, that one gap for that first quarter. Maria, we talked about that as well. So payroll growth rates can shift the economy. I'm sorry. Okay. Can shift with the economy. Again, we've seen that with COVID and a few other downturns in the market. There's no doubt the impacts are felt in the BP tax as well. So again, it says it on here. Unlike Pittsburgh, Scranton does not have the option to phase out the BP over time, which Pittsburgh took 5 years to phase that out. Morgan, can we mute some of those up there, please?
Yeah, I just did.
Thank you. So on to the next bullet here, which is, it's really, I don't like the term winners and losers, but obviously when you're talking tax policy and change.
Hey, Larry.
Yes.
Larry, it's
Hey,
Bob.
Bob.
I don't know whether you saw this, but there is a question in the chat. And since this is a public forum, it seems you might want to at least look at what that question is. And if it's from Nancy De La Rios, you might want to see if you can address that one.
So Nancy, when you said you met with the city, what questions, Nancy LaRosa, as business owners who will be dramatically affected by this change, we had several questions that were not answered when we met with the city, when we had these questions answered. I'm going to assume, Nancy, that was the meeting that you and I had regarding some of the change. I'm not sure if that was you or not. I did meet with some business. Okay. We're still working on some of those answers that you had asked for specifically. We are doing some data mining on it and some of the questions that you had asked. I do have those notes, so we're still working on getting some of those answers for you.
Okay, we would appreciate those being publicly given too, because I think they affect many, many businesses, and we're, we're the ones with our necks on the line here.
Got it. Thanks, Bob, for pointing that out. I did not see when it dropped down and pulled back up, so I didn't see that. So talking about winners and losers, many businesses have not been charged BP and will have to pay the new tax. There's no doubt. And Nancy just pointed out there are businesses that have made some investment in the city. And I understand that there are manufacturers out there that have paid zero in terms of BP tax that would now have a tax liability. Benefits of change must be clear to the public throughout the education marketing process. I've already touched on that. And I understand that there are some questions and concerns, and we will do our best to address them as we go through this process. Some legal challenges with any major shift in tax policy. We are cognizant of how difficult these things are, and we get the fact that going back to the last point that there are winners and losers. And I got to find a better term than that. But we will do our best to navigate these and address concerns and make sure these challenges as they come up are addressed as well. I think I lost my ability to move. Oh, there it is. Skip it around now.
Hey, it's still ongoing. I'll call you back.
So let's talk about some of the alignment with economic growth goals. Some of the legacy issues from the BP tax aside, a payroll tax is less onerous on businesses. A payroll tax is more equitable for businesses than the BP. I think that's kind of what we're all talking about here. The equitability piece is that there will be more businesses paying the tax than currently. There's less tax avoidance. The payroll tax is more predictable than the business tax. This goes back to my third point about the the predictability of it. You understand that the tax rate is set at the beginning of the year. You know what your payroll is set at. The predictability is that there is no guessing what your tax liability is regarding your annual. So there's another one here. Okay. Mayor, the question is not right in front of me. So the Mayor Cognetti is on as well. So the questions are not in front of me. When they do come in, I did answer, but I don't have the direct questions in front of me. So Pittsburgh's experience shows that at the medium term of the payroll tax brings more revenue while eliminating the inequities of the BP tax. And again, we're going to touch on that in the next slide. And my friend Fred Reddick is on. He could talk about a little bit more about Pittsburgh's experience. But the opportunity here is cities across the Commonwealth are hamstrung by a lack of revenue options. We covered that earlier. Scranton has the opportunity, and we just discussed where Hazleton is also prepared to make this transition to a modern tax, 21st century tax that is equitable with scope and greater predictability, and it opens up the future to more efficient tax collections. Again, the collectability, the equitability, and the predictability. And that's really the bottom. Why is this not changing over? That's really what it boils down to for the three ables for this tax conversion. So we're on to Pittsburgh, and again, Pittsburgh is really the only example that we have as it relates to being able to convert. And they did do so successfully while they too were under Act 47. And I think that there's, I know Pittsburgh and Scranton are not on the same scale, but in terms of what the outcomes are, I think we're pretty similar in terms of what our cities are. So Pittsburgh is our only example. As I mentioned, they came out of Act 47. When they did their conversion, there were several examples I already touched on in terms of what the history was in Pittsburgh's revenues at the time. And again, I was talking to Bill Urbanek today. Pittsburgh's BP tax actually at the time of their conversion was actually increasing. And when they made this conversion, he did confess to me that at the time of their conversion, the city was in a much different spot. Their Act 47 experience was by comparison, I think, very similar to Scranton's at the point where they were nearly bankrupt. Their conversion happened at a time where the governor in Scranton, or the governor of Pennsylvania, at the time was Ed Rendell, had some popularity with the program. He did promote it in the city in Pittsburgh. Pittsburgh city itself was the only one eligible to convert, since the school district did not levy the business privilege tax. So it was only one entity, one tax community that had converted out there. So there were some small nuances between them, but at the end of the day, when Pittsburgh set their rate, and I'm going to call on Fred Reddick, who's a longtime friend and help in this space. Fred was the executive director of the Governor Center for Local Government Services with the state. He is now since retired and doing some consulting work. But Fred and I have communicated back and forth several times over the last few months, and I appreciate, Fred, I know you were signed on here. If you could maybe talk a little bit about what your experience with Pittsburgh was, and maybe you can elaborate a little bit more about what we're talking about here.
Sure. Thank you very much, Larry. I'm glad to participate in this evening's forum. First, just in the way of a little bit of background, as Larry indicated, I actually held a range of positions in the department, but I started in the department with the enactment of Act 47 back in 1987. So among a multitude of responsibilities I had over my 30 years in the department, I always had responsibility for the Act 47 program. I was involved with Scranton going back to 1992, whenever they were initially declared distressed, and have been involved with them up until the point that I retired in 2017. I likewise was the lead individual in the department dealing with the city of Pittsburgh with their recovery effort. And, I will touch on my experience there. As a key element of the city's initial recovery plan that was enacted by Pittsburgh in the summer of 2004, the coordinator at that time, and it was the joint firms of Eckert, Seaman, Sharon, and Malott, a law firm in Pittsburgh, and Public Financial Management, who I think you're well aware of, has worked in Scranton as well, but they were the joint coordinator for the city. They recommended several measures that would close the gap between revenues and expenditures in order to achieve a fiscally sustainable government. At the time, the city's revenues had been stagnant or declining, and they were unable to keep pace with rising expenditures. The 2004 recovery plan focused on ways to both moderate expenditure growth and overhaul the city's revenue structure. Key to the overhaul was the implementation of the Payroll Preparation Tax, combined with a reduction and ultimate elimination of existing business taxes, the mercantile and business privilege taxes. The Payroll Preparation Tax recommendation was predicated, though, on the passage of legislation, and required the city to work very closely with the legislature and with the governor to achieve its passage. Following extensive discussions with the legislature, Act 222 was enacted and signed by the governor December 1st of 2004. Among its various provisions, some of which applied statewide, such as the expansion of what is now the local services tax, and others were unique to Pittsburgh. The payroll preparation tax was authorized for the city to be levied on the gross payroll for all for-profit businesses at a rate of 0.55%. The rate was established based on historic revenue derived from the mercantile business privilege tax. And as Larry indicated, Pittsburgh experience was that the rate was actually a bit on the low side, but it was frozen at the 0.55% rate. The tax specifically provided an exemption of the tax for nonprofit entities, though if a nonprofit entity also had a related entity that did not meet the Purely Public Charity Act provisions, then payroll for that portion of their operation would be subject to the tax. The legislation provided for a 5-year phase out of the tax. The mercantile tax was eliminated immediately for 2005, but business privilege tax was phased out over a 5-year period on a declining basis to provide a bit of flexibility for the city, given the uncertainty of the revenue estimate going into it. The payroll preparation tax applies for all for-profit businesses, as compared to the mercantile and business privilege tax that, as has been discussed on the call, has a number of exemptions and is punitive for many businesses. The most significant exemption involves manufacturing operations. Also, financial operations by their nature are exempt from the tax. There are also many difficulties in the collection of the tax, given the subjects of taxation, the collection and reporting processes that are employed. The payroll preparation tax is a far more equitable tax. The Tax Reform Act of 1988 that Larry referenced earlier prohibited any municipality that had not previously imposed the tax from imposing it in the future, and also prevented any expansion of the tax on those who already levied it. The act recognized the complexities associated with the tax, thus freezing it for future use. The Pittsburgh legislation did freeze the rate at 0.55%. Based on what has occurred since its enactment, the payroll preparation tax has historically grown at a higher rate than even the earned income tax. The payroll preparation tax has grown steadily at an average rate of approximately 4.6%. The latest numbers that I have, and Larry mentioned he may have some even more updated numbers, but show, as an example, in 2010, the payroll preparation tax generated $46.6 million. In 2019, it generated $68.3 million, a $21 million or 47% increase over the span of the 9 years. Recognizing the success of the tax in Pittsburgh as an alternative revenue measure, the legislature in 2014 amended Act 47 to, among other provisions, authorize the imposition of the payroll preparation tax for Act 47 municipalities, subject to County Court of Common Pleas approval and further supported by a certification by the coordinator at a rate that is equal to the revenues from the mercantile business privilege tax that were generated in the preceding fiscal year. So again, I think the Pittsburgh experience has been a very successful one over time, and I think it was recognized as a success by the legislature in expanding the opportunity to impose the tax to other Act 47 municipalities. As Jerry indicated, Hazelton is moving down that road, and I know it's at least under consideration by some other Act 47 municipalities. I would highlight the fact that it is an option that is only available to Scranton City, though, during their tenure in Act 47, which is drawing to a close.
Mr. Reddick, can I ask you a question? I noticed in the chat a long commentary by someone from Simplex about the likely business exodus or the difficulty of bringing large employers into municipality after they've imposed this kind of tax. Has that been the experience in Pittsburgh?
It really has not. You know, Pittsburgh has been and is an urban center, and it really, you know, I'm not saying that there haven't been, you know, some entities that have left, but in general, that has not been the case at all. And I think that can be substantiated by the revenue that is generated from the tax.
Yeah, and earlier Jerry Cross mentioned that the definitional matters that inevitably lead to a lot of litigation here. Larry mentioned litigation as an issue for here, but does the litigation in fact drop as a result of the clarity on the definitions?
I think litigation, there is always that risk, but if you take a look at what has happened over time with the mercantile business privilege tax, there have been case after case after case dealing with that tax. The equity of the payroll preparation tax is such that I think you're not going to see anywhere near the number of challenges to the tax that you have had with the mercantile and business privilege tax on a statewide basis over time.
And a last question, what you've given a very favorable picture here of what the experience in Pittsburgh has been. What have the downsides been?
Downsides, would be based on economic conditions. You're going to have, volatility with situations like what COVID-19 brought about. Whenever you have an economic downturn, that typically will lead to a drop in revenue in the earned income, and likewise, it would lead to some drop in the payroll preparation tax.
But specifically, the introduction of the payroll tax. What experientially now, not conjecture. Experientially, what downsides have actually occurred as a result of the conversion? Taking business cycles and economic cycles out of it.
In looking at Pittsburgh, I don't, if you take that out of the equation, the Pittsburgh experience was such, they had active involvement from the Chamber of Commerce. The chamber director at that time, Barb McNeese, was very active in working with the business community on this issue. It was generally accepted by the business community from an equity standpoint. I can't say that I really recall any specific, downsides from my experience.
Hi, Fred. Maria Costanzo from the tax office.
Yes.
Looking at this graph, it looks like the first several years of implementation were under collected from the end of the BP tax. How long did it take to get back up to collection rates?
You were roughly in 2013 to 2014, you were back up.
So you went 4 years collecting less?
Yes.
Okay. Do you think Pittsburgh could have implemented this in 2 months?
They basically did implement it in a couple months.
It phased out over 5 years, though. What did that involve?
The mercantile tax was eliminated in 2005. The BP was reduced by, it was 2%. It went down to 1% in 2007 and then was eliminated completely in 2010.
Thank
and
you.
I think you can see that reflected in the blue lines of what happened.
And to the previous conversation too here, the years where that recovery was occurring was one of the worst business cycles in 25 years, right?
Kind of like now.
Right, 28, 29, 2010, yes.
Fred, thank you for that. And Bob, I appreciate the interacting there on the questions. And I know that there was another question that had come up. Let me see if I can pull it back in here. I'm not really clear 100% on this. Maybe one of you can answer. Are there any exemptions from the payroll prep taxes? Are there any listed known exemptions for it?
Well, the nonprofit entities are exempt. However, as I said, if you have a nonprofit entity that is also operating a for-profit operation, the for-profit element of the nonprofit would be subject to the tax. But other than that, nonprofit entities are exempt.
So Marie Schumacher has a couple more questions here. How will Social Security numbers that go with wages be protected? I'm not sure anyone here can answer that question. I know it's more of a technical question on the contracted side of the collection. And then she has another question here.
I'm just wondering. I'm just wondering if Social Security data would even be remitted, as this is an employer tax, not an employee tax.
Good point.
I would imagine the tax return would look something on a quarterly basis like total wages applicable to the tax in the period multiplied by the rate, and that's what you remit. There would be no there would be no individual line item employee data would be transmitted. I wouldn't imagine.
Did I just cut somebody off there? So Nancy put another question up here, another statement and a question, but Pittsburgh is surrounded by rivers and mountains. There's a hub for banking. Scranton has already had businesses leave. There is no incentive to put a business in the city limits. This tax is another reason to go to area businesses, to another area business park and avoid the cost. It is also crucial to understand how this tax will be levied on those who are partnerships, S corps, etc. Most professionals are paid by distribution, so the theory and non-taxable, these revenues would be lost. Fred, can you talk a little bit about that? That was one of the questions that we had sent down as it relates to S corporations and the filing and how we collect on that, or what the options are there.
Larry, I can read right from the frequently asked questions in Pittsburgh if you would like me to address it.
There you go.
Yeah, that question was something that we were able to locate on the resources that Pittsburgh provided, but
Okay.
response is that the amount or the partner's self-employed person's draws from net income from their businesses that have activities in the city shall be reported for payroll expense tax. Taxable distributions are limited by the sum of the draws or net income for that partner or self-employed persons, whichever is less.
Thanks, Pat. I appreciate that.
Yep.
And one of the other questions that was out there is, can this tax be capped? One of the discussions was, could it be capped at the size of the payroll, basically stopping it at $1 million or $1 million or $2 million, and allow it to be capped so that as businesses grew, their tax liability would be limited as well. We were looking in the definitions and I know there's a clause in the Commonwealth regarding tax equity there. I don't think that would be possible. Fred, maybe you could talk to that as well. I'm not really clear on that.
Yeah. I'm not sure I fully understand the question there, Larry.
So the question is, if we set the rate at, if I can remember correctly, if we set the rate at 1.085 based on a set payroll rate. So basically saying that if you're paying up to if your payroll is $1 million, and as your business grows, maybe you go to $2 million and it's still the same rate. Is there a cap at which you don't pay past the $2 million payroll, that it's capped at that tax liability?
No, there's no cap provided for.
This is Joe Fasula from Garrity's. I was the one that originally posed that question. Can there be? Because this is extremely punitive to larger employers, especially those of us that have very slim margins. We're going to get really hit by this very, very hard. And my question was, can we have some sort of a cap, or can it be in some way graduated downward as the payroll grows, maybe from the 1% down to 0.5% or to 0.25% as the payroll grows, or capped as soon as you hit a certain percentage? Can that be done?
The Act is silent on that issue. The Act does not really address. I don't think you can graduate it, because the rate would be set, but putting a cap on it, again, the legislation is silent on that issue.
So that means it could be possible to do that then?
I think you've got that possibility, but also that poses a risk, of a potential challenge to the tax too. I think that's an issue that, as Larry mentioned, that there is an RFQ that's going out for legal services. And, although I have a lot of experience with Act 47, I'm not an attorney, so I don't want to render a legal opinion on that. But the legal RFQ that is out would come into play to assist both the city and school district in responding to that issue.
Okay, well, I certainly hope we can get an answer on that. And the only other thing I'd ask is that you please stop referring to it as fair, because it is far from fair for those of us who have been paying our mercantile tax for years and will now see a significant increase because we are a very labor intense operation. So please stop referring to it as fair. It is not fair.
Thanks, Joe. So there's another question from Simplex, and is it true the rate in Pittsburgh is half that proposed rate in Scranton? I don't know if it's exactly 50%, but as I indicated earlier, Pittsburgh was a city. The city of Pittsburgh did the conversion on their own. In this case, the city of Scranton and the school district both levy this tax. So the conversion, it is true, it is probably half the rate, 0.055. But again, that's a function. We only have one taxing entity here. We have the two taxing entities that we would be converting for. And the rest of the question was, if this isn't true, can you explain how the Pittsburgh City and school tax is collected since it is being used as a shining example of what tax could be? So I think that answers that question. If it is true, then with the proposed rate that is 100% larger in Scranton than Pittsburgh, where the economy is 4 times the size of Scranton, how can Pittsburgh's results be used as a realistic barometer of what to expect after the implementation in Scranton? Again, I had mentioned it earlier in my opening statement, in my talks on the different points here. I said that Pittsburgh and Scranton are not exactly the same. That there is definitely a difference in the economies here. It's an economy of scale. As we indicated here, just by looking at Pittsburgh is collecting $70 million in their payroll tax versus what we're looking to collect here at $10 million. So that's 7 times. But you're right. They're not direct comparisons. But unfortunately, at this point, it is the only comparison we do have. It's the only example that we have.
And Larry, can I clarify one thing I think may have been said earlier too? A question was about contractors not located in the city and not being able to tax them for the work done in the city. It's our understanding that if the contractor has an office outside the city of Scranton but does work in the city of Scranton, they're subject to the payroll expense at a proportionate share of the amount of wages earned while in the city of Scranton.
So an outside business is going to have to figure out how much they paid while they were in the city of Scranton, and they're going to be completely honest about that. Then you're getting into the same problem that you have with the BP tax. That will be.
We definitely need to determine a way to calculate the tax and audit that tax.
Wow.
So there's another question. Thank you, Pat, for that. So General Dynamics pays no property taxes. They operate in the government facility. Would they pay the payroll prep tax? I don't believe General Dynamics is a not-for-profit or a government business. They are a contracted business. And as far as them paying no property tax, I'm not 100% sure about all of their properties. I know that there is a private entity that does have ownership of one of their properties, and they do pay property tax on it. But could someone talk to that piece about General Dynamics paying no property tax and would they pay payroll tax? No?
I don't know anything about.
I'm not clear. I believe they're a private business, and I believe that they lease.
I don't. Sorry. Hi, guys. How are you guys doing? Sorry, I'm at home with I'm not trying to expose my cold to anyone. I don't have the exact answer to General Dynamics, but from my perspective that they are a private company and they should pay the tax. So things like that. I mean, I realize that their contract is with the government, but I don't see how that would exempt them as a private sector employer. And then I think we need to talk more about what we just discussed about the outside work. And we have to be able to, things do have to be collectible. So that's a piece. And Mr. Fazula, on the grade, I see where you're going with that. I mean, I think from the Pittsburgh example, of not having a cap, we're probably lean on something that's been successful in another city, kind of similar to ours in some ways. But I think it's something that we can keep discussing.
Thanks, Mayor. So this is the next slide here. If anybody has any more questions, I didn't see anything else pop up there, and I'm hoping we're answering as we're going along here. The payroll tax annual percentage rate, and Fred, thanks for that deep dive into Pittsburgh. I'm sure if we have any additional questions, we'll come back to you on that. I appreciate you coming on here tonight. So basically, this is the annual percentage growth of 4%. Again, we talked about. I know that there's some questions regarding the equitability of this, but at the end of the day, there's an organic growth just based on payroll that happens under the payroll tax increases that are given just organically would automatically forget adding businesses into our footprint. Growth is still dependent on economic conditions in terms of wages, compliance, and collections, but the average annual growth is at 4%. So in summary, at least in terms of the slide deck here anyway, for Pittsburgh, the payroll taxes apply a stable source of tax revenue that is fairly applied against all for-profit business that operate within the city limits. I did ask that question today to Mr. Urbanek, if he still views it as a stable source of tax revenue. Based on that statement, he absolutely concurred. By better distributing the burden of basing the tax on salaries of those for-profit businesses proven to be more dependable and easier to forecast tax. Again, that goes back to that predictability piece that I had mentioned earlier. And while there have been some problems with the application on the tax on transient businesses, Maria, to your point here, such delivery services as FedEx and UPS, whatnot, in the scheme of things, these are small details that we continue to work through. And all in all, the payroll tax has worked in the Berg, and that's you can tell someone from Pittsburgh when they call it the Berg. But all in all, my conversation with Bill today, he was very high on the transition. He did confirm that there have been bumps in the road, and there remain bumps, even based on today on some of the questions about businesses that were operating within the confines of the city and working from home about what their tax liability will be. But they're working through those things. But at the end of the day, that's the summary on the payroll tax. I appreciate the participation here of all those who spoke up and helped navigate this for me this time around. And I know there were several questions that we did navigate through here, but does anyone have anything else they would like to open up to or opine on? I'm glad to continue the dialogue.
Larry, I'll add one more question that was asked of me at one point, and it was related to, and hopefully this can help somebody on the call. Satellite business locations outside of the city of Scranton, would those wages be subject to the tax? And the guidance that we've seen is that you would only calculate the gross payroll on the employees who work within the city. Any employees who work in the office located outside the city do not work within the city, their gross compensation is not included.
Thank you, Pat.
Larry, just somebody who's been participating in these meetings now for a year and a half. It's been very useful to have people from the general public here today, and I wish we'd had them all along. But what strikes me is, until today, I don't think I've heard anybody on any of our meetings make a case for the status quo. And everything that we've heard in the last 15 months has been what the advantages of the payroll tax are. And I haven't seen a comprehensive list of, any place why the status quo would be the right thing to do in lieu of doing the payroll tax. And that it might be interesting just as an exercise to see someone construct that so we can see what we think the advantages are of staying the status quo, because everything that has been brought before this group over the last 15 months has been very derogatory toward the status quo in terms of the tax situation.
I appreciate that, Bob. There was Nancy put another statement, another message on, and organic growth is one thing, but just this year's wages have gone through the roof just to get staff to apply. So it's a higher expense for businesses, because of course everything is raising. She said she would like to know who is paying less because everyone I know is paying more. No, Nancy, I understand, and I know that's a discussion that's constantly bandied about in terms of our workforce locally here. It's constantly a discussion where our workers are coming from. And sometimes I'm not going to go down this rabbit hole, but it sometimes becomes a political discussion. Fact is that, at least in Lackawanna County, I know Bob Durkin or someone from the chamber was on here earlier, but in Lackawanna County, we have created 3 work opportunities, Chewy, Amazon, and Canpack, light manufacturer up in the Mid-Valley, upwards of 1,000 new jobs that were created in this county. That those things do have impact. It's not just simply folks not wanting to do work. There are some folks who have taken higher paid full-time jobs, and it's creating no doubt creating a strain on our workforce. So to answer your question, I don't know if anyone who's paying less. I know that there's a restaurant right down the street that won't open for lunch because they can't get anybody to work. So I understand.
I could give you a list of who will pay less. Larry.
Who said who popped up
For
on
you.
that?
I could
Okay.
give you a list of who will pay less. Obviously, we don't want to do that in this forum, but I will get that to you.
Thank you.
I believe Carl has it.
Does anyone have any other? I'm sorry. Does anyone have any other questions?
Sorry, let me just chime in. I'm sorry, I was working on something else before the council meeting. And I want to know whose taxes are, sorry, Nancy, I'm just reading your comment. Okay, so I think whose taxes are dropping. Okay, I think I might have missed a piece of that conversation, so I apologize. I think Nancy and others just kind of broadly, we've got Katie Gilmartin from the school board, Pat Laffey from the school district, who are under an intense amount of pressure as we speak today. None of us here on this call on the government side of things want to be having this webinar. I would like us to just not have to have the BPM or any business tax. We are not out to try to punish the businesses that are in our city at all. There are a lot of people who are either, in my case, married to or are business owners themselves on this call in their other part of their lives. We're not trying to be punitive. We're just trying to get to a point where we have a workable economy that uses the tools that we have. We don't have broad taxation tools where we can just do whatever we want, nor necessarily should we. But I would argue that the state should be able to give us a little more bandwidth. I don't think and Jerry, it's no offense, it's not your fault. I wish that we didn't have to make this decision under the gun in Act 47. I think Jerry's nodding, he would agree with me that the state legislature we really should have a more local authority, I think, in how we tax. Unfortunately, we're not in that situation. We're in the situation where we either go or we don't, we modernize or we don't. I understand, Pat, Nancy, Joe, others, that this is tough and this is gonna, hit your line, the lines in your taxes in your budget next year. We just are in a tough spot because we've got to move forward. We can't keep charging the BPM. It's kind of a farce at this point. And then on the other side of it, we can't not have a business tax. The school district, was 7.5 million. Ours is 2.5 million. We're just not at a point in the city where we can forego $10 million of revenue right now. So it's not it's not meant to be punitive. It's not meant to be difficult. We are trying to use the tools at our disposal, of which there are unfortunately quite few. So we can have another more discussions about this. I think we've got some things to think about in terms of, and maybe to talk more with Fred and folks in Pittsburgh about maybe some things that we could do slightly differently within the bounds of the law to try to make it a little bit less difficult. So I appreciate everybody being on here tonight, and I'm happy to stay on for a little bit longer if there are more thoughts.
Does thanks, Mayor. Does the tax committee have anything they want to add? Anyone from the tax committee? I know we've been back and forth on this, and Bob, I appreciate you speaking up here and asking some of the questions. Anybody else have anything they want to add before we wrap it up?
Larry, let me just go back to Bob's comment about that nobody had voiced any concerns. I will tell you that being on that committee representing the Chamber of Commerce right from the get-go, one of the comments that I made right from, when we first started talking about this, and I hope I'm not trying to come across as flippant, is that our position is we don't like to see any specific taxes singularly targeting the businesses of the community. We recognize that there are financial needs for the school district and the city. So I'm not trying to, play this both ways. But at the end of the day, the idea that businesses are asked to pay an extra fee above and beyond property taxes and payroll taxes and LST is something that I voiced in the early meetings of the tax committee. That said, there's a reason that we haven't taken a formal public opinion and position on this, and that's because we're a diverse membership-based organization. And Larry, I know you keep saying, and I agree with you, we don't like to talk about this in terms of winners and losers. But the reality is that we have almost 500 Scranton-based members of the Greater Scranton Chamber of Commerce. And so whatever change may take place is going to positively impact some and negatively impact others. So we felt that our best way to do this, to deal with this for our businesses and businesses that are not chamber members, is simply to provide good information so that the businesses involved have an opportunity to come forward as they have and express their concerns. So I'm not, I want you to know that we're not hiding behind anything. We're rather trying to be as transparent as we can to make sure that our businesses understand what the long-term ramifications are of this transition. By the way, all of that, built on the foundation of probably, 40 years of the gross receipts taxes and the Greater Scranton Chamber of Commerce being on record, against the gross receipts taxes over all those years. So I know it seems like I'm trying to have it both ways, but basically all we're trying to do is to make sure that good information is provided to the business community. And I appreciate the efforts that Larry has made. The mayor has been very clear and transparent with us on this, as has the school district. Pat Laffey met privately with some of our businesses. Larry met privately with some of our businesses. Publicly, Larry did a presentation. I'm simply saying that this is not a great situation because there are going to be some folks that are unhappy. I just want to say that I think it is fair to say, and I think it's appropriate to say, that the people involved in this decision have done so with a level of transparency and openness that's really important and valuable. So however it plays out, it's been done, I think, in a fairly direct and honest fashion.
Thanks, Bob. I appreciate that. And listen, I know that there are things that kind of do fall off the plate here from time to time. But we have done our level best to navigate this at a time where, again, I don't think it's any secret the school district has they're not having the best of weeks. We in the city, as you know, are preparing to exit out of Act 47. It's all budget time for us as well. So, yesterday was another day of change. So we've had a lot on our plates as well. No excuse, just saying day-to-day things here at times do fall off the plate. So I know that Morgan did take a copy of all the questions and statements that were put up online here. So we will go back through them tomorrow. But I appreciate everyone's participation. If no one has anything further, we'll wrap this up. Anyone? No, Mary, do you have any closing thoughts, or are we clear to go?
I mean, I would be happy to talk all night about how much I don't want to put this tax on. I would love to just eliminate the business tax. I mean, that's like no one on it's kind of, well, there's so much, right, that we have to compromise on. There's so much that we have to do that makes people unhappy, to try to get where we need to go. And, you know, Jerry's been guiding this city on this for longer than anyone on this call. You know, this is compromise, and I appreciate how difficult it is. And I hope that a conversion to this tax is not as bad as some think it will be for their own businesses. We hope that it's something that is a cost that can be absorbed, and that people aren't making business decisions based on a payroll tax. You know, that we certainly hope that that's not the case. We certainly think that the city, being in the city, having the amenities and the downtown, the cultural pieces, the food, the atmosphere, the culture, like all the art and the music and the shopping, all these things that we're really trying to not just maintain, but make thrive. We want that to be worth it for everyone. We really are on the map in so many ways. You know, if we could just rip this BPM off and be done, we all would. But we really are at a turning point. We hope that people are going to want to stay in Scranton and help make it great and really make the progress we need to at the city. And I'll just say the school district as well. So it's a tough thing. And again, nothing's easy about any of this for any of us. And I do want to hear more from you guys about this, and just know that we know it's imperfect. And I appreciate, Fred, you being on with us tonight, and all the other folks that have chimed in from other places. Thank you.
Thanks, Mayor. There was one more question that just popped over here. So and I'll end with this. It's a question. I think I have an answer for it, but if there was a business that did overpay on the first year, would the city or would the taxing entities offer a refund or a tax credit for the next year? It's a fair question. As I mentioned earlier, that we would have the opportunity, both the district and the city, to recalculate the percentage rate if there was such the issue that we did over collect or a business overpaid. My answer there is I believe that's why we are hiring some legal advisors on this, and I think that's something that we'd have to work out in terms of what our policy would be, whether we did a refund or a tax credit. I'm not sure how that would play out, but that's something that we'd have to work out in the details and agreement between the city and the district.
Well, Larry, just let me handle it. I think the way that would be handled would be through the refund process. There's already procedures in state law about obtaining a refund from a municipality if you overpaid your taxes. And those procedures could be used, or that perhaps there'd be new procedures established in the ordinance. But there's existing law on that. The ability of a taxpayer to seek a refund, it's a very simple procedure, and it would be applicable here in this case also.
Thanks, Joe. I'm glad you're on. I didn't even realize you were here. Thanks for showing up tonight. I appreciate it.
Well, I've been doing a lot of listening. I did a lot of learning.
Yeah. Well, I appreciate the input. Does anybody have anything else before we sign off? No? All right. Well, thank you again. And I'm not sure when our next meeting is scheduled, but I appreciate everyone's input. And if you have any other questions, please send them in, and we'll do our best to get back to you. Thanks, everybody. Have a good night.
Night, everyone.